If you watch the news, they keep telling you to be scared. They're talking about sticky inflation and they're talking about new tariffs in 2026. And they're painting this picture, indelibly so, that 2026 is going to be the year of a recession. And usually, when business owners get scared, they retreat, just like consumers. They fire people and they hoard cash, they batten down the hatches. But I want to tell you something, and that's not what we're seeing, right? At Cardiff, we see tens of thousands of applications each week. We have a literal front row seat to the actual pulse of the American economy. And what we're seeing, I think, completely contradicts the headlines. Main Street isn't retreating. They're doing something much smarter, I would argue. They're playing offensive defense. We just published our Main Street Resilience Report, and the data in here, I think it proves, right? The new prime business owner is way ahead of Wall Street. All right, check this out. I want you to take a look at section 2. So we saw a 40% spike in loans that are used for inventory and raw materials. Now, I want you to ask yourself why. Why would businesses borrow more when interest rates are high? Well, it's because they're doing the math. They know that tariffs are coming in 2026. I mean, they lived through them in 2025. They know that steel and lumber and microchips are going to be, 15 to 20% more expensive in the coming 6 months. So they aren't buying inventory to sell tomorrow. They're buying it today to lock in today's price. And this is the inventory hedge. Smart business owners realize that cash that's sitting in the bank account is losing value to inflation by the moment. But what about hard assets? What about inventory and materials? Well, those are gaining value. So they're trading a depreciating asset, cash, for an appreciating asset, materials. Now, the problem is, try explaining this strategy to a traditional bank. So, all right, let's say you go to a bank and you say, hey, Mr. Bank Manager, I need $500,000 because I'm going to stockpile a bunch of inventory over the next year. Well, they're going to look at you like you're crazy, right? Their underwriting models are built for just-in-time inventory. They want to see immediate sales reflected on your P&L. They don't understand the concept of protective borrowing strategy. They think you're over-leveraged. And we know at Cardiff that you're just being smart. So the report shows that these businesses are not distressed. They're actually the strongest companies in our portfolio. They're using capital to build a moat around their business before the storm hits. And that type of strategy requires a lender who understands the macro economy, not just a spreadsheet from last year. So there's one more thing that you should see here, and it's about labor. Everyone says, nobody wants to work. But look at the data. Loan requests for payroll are down, but loan requests for automation and equipment, they're up. Huge. Main Street, right, has stopped waiting for the labor market to fix itself. They're done paying 20% more for employees who might quit in a month, right? They're borrowing to buy machines, to buy software, to make their current team twice as efficient. They're swapping Opex, right, variable payroll, for Capex, fixed assets. And quite frankly, it's a genius move for stability. And again, good luck getting a 45-day bank approval for a piece of tech that hits the auction block tomorrow. The media wants you to panic, but the data shows that you should be preparing. Now, the smartest entrepreneurs we know are securing their supply chains today. They're automating their workflows now. They're securing the capital now, while they're strong, so they don't have to beg for it later. And at Cardiff, we built our model to support this exact type of strategic borrowing. We don't need to see a P&L from 2023 to understand why you need to buy more steel in 2025. We get it. So go download the Main Street Resilience Report today, read the strategy, see what your competitors are doing right now to prepare for 2026. Don't let the headlines scare you. Let the data be your guide. I'm William Stern, and let's get to work.